Hi everyone, thank you very much for joining us on this episode of Startup Talks. Pakistan has been attracting quite a bit of investment, and the ecosystem, the startup ecosystem in Pakistan has gained a lot of traction internationally and attracting investors in the country. One such investment firm by the name of Sturgeon Capital, and its director, Robin Butler, is here from the UK, currently in Karachi, and we are going to have a chat with him and see what he has to say about the ecosystem in the country. Welcome to the show, Robin. How are you doing?
I'm very well, thanks. Thank you so much for having me on and giving me this welcome to Pakistan.
Well, okay, that's great. This is your first time in Pakistan?
Yeah, this is my first trip. I've been planning to come or trying to come for the last 2 or 3 months, but a variety of
Mhm.
life and COVID and everything getting in the way meant that it was delayed. But glad to finally be here.
Okay, you're enjoying the food here then, the spicy food.
Enjoying the food, yeah. I think everyone's been kind so far and gone for the less spicy option.
Okay. Now, coming to business here, Robin, what's Sturgeon all about? How long has it been investing? What kind of markets is it operating in?
Sure. So Sturgeon Capital is a London-based VC investing across what I think for the sake of simplicity, you would call frontier and emerging markets.
Mm-hmm.
We invest in early stage startups in a range of different sectors.
Mm-hmm.
If you look at kind of historically where we've deployed the majority of our capital, it has been in Central Asia,
Mm-hmm.
Uzbekistan, Kazakhstan, also in the Caucasus and Eastern Europe, Ukraine, Georgia, and quite significantly in the Middle East as well. And what we're currently working on, and the reason that I'm here in Pakistan is we'll be launching our third fund midway, probably in the middle of this year.
Mm-hmm.
And for that, we're expanding our mandates to include Pakistan and also Egypt and Bangladesh, as we believe they're all very interesting markets from a kind of fundamental perspective,
Mm-hmm.
and also that by and large, and certainly until last year, had been largely ignored by international investors.
Mm-hmm. Okay. So, what are the ethos behind investing in startups? Every investment management firm, every VC has its own playbook to go around with. Um, so, what's the ethos like at Sturgeon then?
So for us, what we're really looking for and the startups that we get most excited by are those that are really solving a fundamental problem or pain point
Mm-hmm.
that affects the day-to-day lives of businesses and consumers.
Mm-hmm.
So to build on that, we're a for-profit and for-impact firm as well, particularly focusing on creating employment opportunities and improving financial inclusion through technology and technological innovation.
Mm-hmm.
I think it's something that we really believe in, and that I believe we are making a kind of positive impact towards by deploying true private capital into private businesses, looking to remove reduce the inefficiencies that exist in day-to-day life,
Mm-hmm.
whether that's through sort of software solutions for businesses, whether enterprise or SMEs,
Mm-hmm.
providing access to financial services for individuals and also for businesses.
Mm-hmm.
That forms a core part of what we're investing in.
Mm-hmm.
And then if you look at the kind of the markets that we work in,
Mm-hmm.
I think that although pretty disparate in terms of sort of geographical location and various other factors, I think what unifies them is that you have large young populations
Mm-hmm.
and high smartphone and internet penetration. And I'm not telling anyone anything new here, but what we believe is that really creates the foundations, the kind of rails on which you can build technology businesses. And I think the kind of the comparison that I'm sure has been drawn before is, say, between somewhere like Indonesia and Pakistan. Sort of similar in terms of population size and demographics, pretty similar. But if you look at kind of the smartphone penetration and internet penetration there,
Mm-hmm.
it arrived much earlier than it has in Pakistan. And I think once you have that, until you have that, you aren't able to build significant businesses. And I think what we've seen in Egypt, in Pakistan, in Bangladesh, and in the other markets that we invest in, is that now you have that. You've seen a real uptick in terms of kind of technology entrepreneurship and innovation and startups, and that's a kind of secular trend that we want to be investing in for the next 10, 15, 20 years.
Okay. And it's interesting that what's happening in Pakistan, a lot of people, a lot of VCs as well I've spoken to, they always compare Pakistan ecosystem to that what's been happening in Indonesia 5, 6 years back, right? Of course, it started a lot earlier due to internet penetration and cell phone use and all of those metrics. Now, which spaces, which segments of businesses is Sturgeon into? What are you guys looking for? What are you exploring here?
Okay, by and large, I'd say we're sector agnostic, but there's kind of three areas that we like, and this kind of covers actually pretty much the majority of businesses. So I'm not refining it a huge amount, but by and large, marketplaces. So both B2B, B2C. B2B SaaS solutions, particularly those focused on small and medium-sized businesses, and then fintech, and particularly fintech where it's integrated and embedded within an existing, say, marketplace or SaaS solution. Because when you have that existing user base, whether it's a marketplace, the sort of consumers using a marketplace or businesses relying on a piece of software, you already have the distribution and far greater and far better data on the end consumer, on the end user, to be able to provide them access to financial services.
Okay. You probably have some meetings lined up with some startup founders, right, within these few days that you're here in Pakistan. What sort of ticket sizes are we looking at, and which stages is Sturgeon more into? Is it just only early stage, or do you go into Series A's, B's, C's? What's your
So I'd say the kind of sweet spot where we like to invest is the kind of pre-Series A, Series A stage. And our initial ticket size is usually around 1 to 2 million, depending on the kind of the stage of the business and our conviction around the investment thesis. And then we look to follow on in certainly 1, if not 2 more rounds after that. And for the fund has the capacity to lead both that kind of, whether it's pre-Series A or Series A round, and then also that Series B round as well.
Okay. And are there any initiatives that Sturgeon is willing to take to build on relationships with the ecosystem in Pakistan?
So kind of this is obviously my first trip to Pakistan. I've been following it from a distance in the news at a very high level for the past year or so. But wanting to actually come here and kind of be on the ground, sit down with people, meet face to face, kind of try and get a better sense of what's really happening in the local ecosystem. What are the challenges? Because you can see what makes it into the press tends to be just the good news, and it's the high level numbers, it's the fundraisers, which is fantastic. I mean, it's really fantastic to have seen what's happened in the past 12 months, certainly here in the local market. But that's kind of there's always a risk. There's kind of a lot of noise and hype that gets to that level. So I wanted to come here and spend time on the ground, meet with people kind of face to face, get a better sense of both for the startups and for our kind of pipeline for the next fund, but also look at investors, lawyers, regulators, just people involved or interested, such as yourself, and just to try and get a better understanding. So to guide how we invest, what stage we invest, what value we can really bring for startups. We don't just want to be investing from afar and taking risks on that in that way. But in terms of kind of what we'll do going forward, and certainly our intention is to hire a small team here in Pakistan to kind of manage our operations here.
Mm-hmm.
And they will become the kind of the face and the main interaction points with the local ecosystem. The team from London, particularly myself, will be visiting here on a regular basis. So I look
Mm-hmm.
forward to coming back here often. And that'll be the kind of driving force of our sort of engagement with the local ecosystem.
Okay. You talk about creating value. Don't get me wrong here. I'm just trying to be a bit critical over here. A lot of VCs, a lot of investment companies, everybody comes with a different mindset, right? Some they just invest money, right, and expect returns. Of course, it's absolutely fine to expect returns. You're investing money to grow a business, right, and taking some liability on. Now, what kind of values does Sturgeon bring on? How, say, for example, if I'm raising funding from Sturgeon, right, apart from capital, what kind of value is Sturgeon willing to extend to whichever segment or whichever startup they invest in?
Sure. No, I mean, as you say, there's not necessarily anything wrong with just investing and stepping
Yeah.
back and leaving a founder to it. And ultimately, we would never invest in a business if we didn't think that the founder and the team around them had the ability and the ambition and the drive to be able to build what they've promised in their presentation, which obviously always shows
Yeah.
everything going up and to the right, usually at an alarmingly high pace of growth. But so that's kind of an underlying principle for us. But then, of course, it's never a smooth ride. And I think if you sort of take a step back and before getting into details, what we want to be and what I think an investor kind of should be is a sounding board for a founder. I think in the end, being a founder can be quite a lonely experience, particularly if someone hasn't done it before. And being that sounding board, that's someone that the founder can trust, can go to, and know that they will get honest and sort of thoughtful feedback. It may be criticism, it may be sort of positive feedback, but that it'll always be honest, it'll always be there, and that it's someone that they can rely on. And I certainly think that's something that we've worked hard on with our existing portfolio companies, and something that we'd look to continue here. But then, kind of more specifically, it's reacting to what it is that the founders struggling with. I mean, three broad areas that we tend to find startups struggle with, or not struggle with, maybe struggle with, have challenges with. One being fundraising, and that's not just kind of, there may be plenty of capital around, but really understanding and helping them understand kind of how investors think in terms of kind of putting fundraisers and the business progress in a kind of timeline. So kind of saying, this is where we are now, this is how we got here, and this is where we want to go. Helping them get in front of the kind of relevant investors and our own investor network. Another one being on hiring. It's certainly, I was in Egypt before the end of the year in November last year. Across all the other markets that we work in, recruitment, hiring, particularly on the tech side, is a universal challenge at the moment. Salaries are just going up and up, and there's a real kind of deficit on that side. So supporting where we can. I was hearing stories already here of kind of well-funded startups kind of doubling or tripling people's salaries just to be able to bring them in. So it's clearly a kind of an issue here as well. So supporting in that way where we can. And I think on the other side is kind of growth and marketing. I mean, given the sort of stage we tend to invest, that sort of pre-Series A, Series A stage, in terms of I guess what the sort of elusive idea of product market fit, it tends to be pretty well in place. And things can always go wrong, but it tends to be pretty much there. And it's kind of realigning, refocusing the business, and kind of help supporting the founder in really being able to take that initial success, that initial traction, that initial customer base, and really building on that and scaling the product, scaling the service, scaling the solution, whatever it is that they're providing.
Okay. You mentioned earlier that you've been following the ecosystem. Of course, all these announcements and everything that's been going on, they must seem more like vanity metrics when you're sitting afar and following all these things. You're here down on the ground to explore all of that. What's your feedback on the scenario so far in Pakistan?
Um, well, I think it's interesting you use the term kind of like vanity metrics. It's a kind of it's a discussion that you have everywhere. I mean,
Yeah,
it's one of the kind of key things for founders, but it's sort of well, it's a kind of valuation metric. And kind of
yeah,
what valuation are you raising at? What valuation is everyone else raising at? And ultimately, valuation is a kind of is a stationary point, data point, and ultimately it's meaningless until someone actually buys you out. Now it is indicative of the kind of progress of the business and how you're growing and how you're performing. However, what we always try and say is that it's also it's also the yardstick. It's also the metric against which you will be judged.
yeah,
So if you set too high a valuation early on, okay, you execute perfectly, maybe you can justify it, and there are founders who do that, and there's some of the best ones. However, the reality of building any business is there's almost always slippage in terms of kind of your execution and your timeline. And if you set too high a valuation early on, your risk of failure is increasing quite significantly, and failure isn't necessarily the business going under, but let's say raising at a 15-20 million valuation when maybe you should have been a 5-10 million valuation,
yeah.
and then having to raise your next one at say 25.
Mhm.
That doesn't look great. It doesn't make your investors happy, and I think it seems it's fair enough. And maybe historically there was too much power for investors in markets such as these, and I think it's true in a lot of frontier markets that there wasn't very much capital, so it was very much ball was in the investors' court. Now it's that sort of it's kind of the other way around. Founders, there's a lot of interest and they're able to command high valuations, which is great. And there's always that balance between dilution and sort of setting a reasonable valuation. But the one kind of piece of advice is, yeah, think of it in the long term. Don't give up 40% of your company at the pre-seed stage. That's crazy. And if someone wants to do that, they're not the right investor, unless maybe they have real kind of strategic value. But also don't set a valuation which in order to match, you're going to need either just incredible investor demand, so they're not going to care. That's what we have at the moment, but that can go away. Or you're going to have to hit metrics and kind of growth that just isn't feasible. So that's, I don't know, it's true kind of everywhere, and it's something that I always rather have an honest sort of an open conversation about with someone, with a founder or other investors, that just because everyone else is getting it doesn't necessarily make it right. I think it's about striking a balance between what works and what's sort of fair for the founder in terms of both you have the opportunity in front of you, and the thing I think I've heard in every single presentation so far is, oh, but Pakistan is a huge opportunity. 220 million people is how every presentation starts, and I have no doubt it is a huge opportunity. I wouldn't be here if it wasn't, but it's also a very difficult opportunity. There's challenges with infrastructure, with kind of talent, whole variety of things. So I think kind of being reasonable, being appropriate, being kind of relevant in terms of your valuation expectations is really important. And in the end, there's always that thing, if you'd rather own 30% of $1 billion business than 100% of a $100 million business. So that's by and large, I think one of the key points that maybe I'll notice here, but it's true everywhere, and it's been kind of been driven by what's going on in the US and in Europe and in public markets as well. But I've had a bit of correction this year already, and it'll be interesting to see if that does feed through to valuation expectations as well.
I totally agree with you there with regards to valuations. And, whether they go sky high in any market, they do balance out. The system automatically corrects itself in due course.
Mm.
Now,
And also, and it's maybe that thing of like, just because everyone else is raising money doesn't mean you need to be raising
Yeah,
money.
of course.
And it also, just because everyone else is raising 5 million rounds,
Yeah.
if actually you really think about how much money you really need to test whatever the hypothesis or the assumptions you have that you need to test in order to get yourself to kind of the next stage. And if that's only a million, only raise a million.
Yeah.
That's great. You can then do it at a kind of at what will be a better valuation for the investors, but still maintaining your ownership within the business. And that's fine. You don't need to raise a mega round just because everyone else is. So that's kind of I think another point that's worth bearing in mind.
Mhm. It's actually very good. I haven't heard this from anyone as yet. You're taking an analytical approach over here, being a bit getting your hands dirty and going beyond the metrics to explore what the situation really is. Nobody comes out and speaks openly about it, so I appreciate that. It's really great. Now, a lot of international investors they come to Pakistan. It's good that you are going to be taking on board a couple of people, open up a shop or open up an office in Pakistan, right, in the near future. And so obviously going to be spending some busy time over here. A lot of VCs they actually try and partner with the local players as well, especially local investors. I'm using the term local. It's another story that Pakistan does not have any VCs based in Pakistan, right? They're all based out of the domiciled out of the country, but most of them have people originating from Pakistan, right? So, any plans of partnerships with such individuals or VCs or local players?
And look, we certainly want to be working with all the local VCs.
Mm-hmm.
I mean, look, we're arriving in the market at the kind of beginning of 2022. Some of these investors have been working here for 5-10 years in various capacities. They have a much better understanding of the market.
Mm-hmm.
They have a much better network. It would be naive and kind of arrogant to think that we could just sort of waltz in.
Mm-hmm.
And I think what's maybe different between somewhere like Pakistan or these other kind of markets that we operate in is that compared to say the US is that we see it as being much more collaborative with other investors.
Mm-hmm.
Yes, there is more capital flowing in, particularly to the kind of hot deals or the kind of sectors that are doing well. But by and large, there's still really it's really much more about being collaborative. So we're trying to meet with and have already met with several of the local VCs, planning to try and meet with as many of them as possible. And yeah, the idea is really to be collaborative, to be investing alongside them, to be trying to use their experience and to be able to bring some of our experience from investing in other markets, the business models we've seen succeed, the lessons we've seen that we've learned investing in other markets. Because I think ultimately by being collaborative for the next 5 or 10 years, it's much more positive and beneficial for the local market than us all just trying to kind of sort of get the most of each deal and in each business that we can. Now, look, we are in the business of making money, so again, it would be naive to say that we're going to all sort of hold hands and smile and say everything's great.
Yeah.
In the end, it is a business, and we're here to make money, and we're here to be investing in the best companies. Uh, but at the same time, I do, and I hope, and I would like to think that it is being more in a more collaborative fashion than maybe the sort of more sort of zero-sum game that you have maybe in the US.
Mm-hmm. Okay, it's great that you're open about it. If there's any way I can maybe help you connect with people, you can just pop in a message. I'd be happy to do that. Right,
I appreciate that. Thank you.
a lot of people do reach out to me, not only to me, but a lot of other people. Right, I'm happy to connect people as long as an opportunity is being created, because connections make opportunities. All right. Now, Moving on, Robin. There's a general concept within Pakistan. It's actually a global concept. Investors usually go for founders who have actually found companies before as well. All right. Well, it doesn't matter whether the companies failed or they grew or they got bought out, whatever the case may be. In Pakistan, it's actually much of an established fact. You probably must have heard of the name Kareem, and you obviously know Uber and all, right? Most of It's become a phenomena actually. Most of the startups that have raised money, right, raised investments, have had founders who have actually come out of that school of Kareem, right? So they've
It's in Egypt they're called the Korean cartel. I don't know if they're the
yeah,
same name here.
more like a mafia kind of thing over here as well. Um, so uh, so would you or would Sturgeon be looking at only those founders to invest in, or is it here with an open mind?
I'd say really and absolutely here with an open mind. So I think there's kind of there's two ways of looking at it. Now, obviously, someone who's had experience founding their own startup before or working in a startup, that's hugely invaluable experience. They know how difficult it is. They know what it takes. And yeah, I certainly have a kind of positive bias towards those people.
Mhm.
But at the same time, someone who has worked in an industry for 10 years, 15 years, working their way up from the bottom, whether it's a family business or it's one or another one that they've worked in, they they and our experience shows they have a real understanding of what the problems are. It can be very easy for someone to look in from the outside and say, oh, there's clearly a problem in the logistics sector, or there's
Yeah.
clearly a problem in the sort of B2C marketplaces, whatever. So I'm going to start a company to solve that problem.
Mhm.
And although they may correctly identify that problem and they may be able to sort of create a solution for it, and lots of them do succeed at that, and I'm not kind of saying that's it's a bad thing,
Mhm.
but the person who's been working in it for 10, 15 years really understands the problem, has been dealing with that problem, trying to solve that problem at another company for a long time, and eventually what often happens, got frustrated that they couldn't do what they wanted to do because they were in a big bureaucracy, and eventually just thought, you know what, I'm going to go it alone, I'm going to set up a company and try and solve this myself. Those kind of founders really like as well. But and it's also the kind of what we always want to see from a founder is someone who really knows the area that they're operating in.
Mhm.
And that can be because they've spent a year researching it. That can be they've spent a few years working in it. But when you ask them questions and someone who can really go in depth, they go beyond that sort of kind of high level data,
Yeah.
that sort of veneer, that fluff on top, and they dig down, and you can tell they've really thought about the problem. They've really thought about the solution. They've really engaged with the different stakeholders they will need to in order for the business to be a success. That's usually something you can pick up pretty quickly during a meeting, and then even more so once you start kind of digging more in depth into the kind of the numbers and how the startup works and how it's performing. That's usually pretty evident. So yeah, I mean, someone who has experience at Kareem or one of these other startups, great. Always will kind of look at them and take that into account and think it's positive. But there are other ways in which you can become a sort of an expert in terms of what you're doing and in terms of the problem you're solving. Maybe not an expert in terms of running a startup, but
Yeah.
that ultimately is something you can learn. All founders have their first startup, and a lot of them make a big success of it. So yeah, no, I think both those or both of those kind of areas are ones that we look for.
Mhm. Okay, that's great. Now, moving on, we are almost coming to an end of time as well, but I just want to squeeze in a couple of questions here. Um, you mentioned we were talking about the ethos behind investing at Sturgeon. Now, when you guys are looking to invest in any startup, what key particular areas do you look at? Right, everybody's got their own points to follow. Which areas do you look at, which that the startup is addressing, right? Say maybe the team, the research, or the
Sure.
analytics. What areas do you look at?
So the team being one, and we've kind of talked about that and the sort of things that we look for.
Mhm.
Um, Second one being the kind of the size of the problem that they're solving, and is it significant enough that it can support a significant business? Because ultimately we are targeting a financial return,
Mhm.
and you've got to put into context is, can this big business be big enough in order to generate that return for us? One thing that even from the very beginning is thinking, well, what are your potential exit opportunities for this business?
Mhm.
Is it a sort of $500 million business that you can IPO or sort of be acquired by a large international player, or is it a sort of 100 to $200 million business that maybe is acquired because there's a sort of very strong cash flow?
Mhm.
Um, but I think one area that to me is hugely important is around the kind of data that the business has.
Okay.
Ultimately, if you're a technology startup, you should have access to a huge amount of data, and the decisions you're making should be driven by that data.
Mhm.
Maybe in the early stage, if you're at the pre-seed stage, you don't have any, you're going off assumptions, you're testing them. Completely understand that. We don't typically invest at that kind of very early stage, but by the kind of pre-series A, maybe sort of late seed, series A stage,
Mhm.
you should know what your key metrics are. You should be tracking them. You should know how they've been changing, and you should be able to really talk about them in depth. It's something. I mean, it's a real kind of uh, warning sign if you ask a founder, kind of, well, what are your key metrics?
Mhm.
Is it your GMV, whether it's your run rate, whatever it is. Where are you? Like, where are they now? Where have they come from? Where are they going? And if they can't really talk to that, and if they can't share it
Mhm.
in a kind of clear fashion, whether that's through a sort of, whether it's in an Excel file or it's made pretty on a kind of online platform.
Yeah.
If you can't do that, that's a real warning sign, because it says to me, well, you're not really making these kind of data driven decisions, which ultimately you should be doing, and you will need to do in order to make the business a success. Because particularly as you raise larger amounts of money, when you only have a couple $100,000, the capital you're allocating to test assumptions is relatively small. So if you allocate it inefficiently, it's okay. It might be the end of your business, but it's not a kind of huge waste. Once you're raising millions of dollars, and you're allocating capital, if you're not doing so in a data-driven fashion, the risk of you being inefficient, of you wasting that money, wasting my money and other investors' money is much greater. So I think, and I know it's not everyone's strong point.
Yeah.
It's not necessarily kind of sexy,
Yeah.
but you or someone on your team, or someone that works with you, should be helping you and making sure that you can present your data, you can talk to it, you can explain it,
Mhm.
and you're using it within your business to drive decisions.
Mhm. Last question, Robin. Obviously, you're going to have some. You probably have a busy schedule. A lot of people are going to be following you around while you are in Pakistan. Um, what's what's your itinerary like in Pakistan?
Um, crazy busy. I put that post on LinkedIn last Saturday morning,
Yeah.
and I went out, and I came back, and it had just gone mad. It was like 300 likes and like 700. It's now like 900, and I'm gonna apologize to a whole load of people who sent me messages or we commented on it. It's just like, I tried replying to some, and I couldn't. I couldn't reply quick enough to the oldest ones to catch up with the new ones that were coming in. So like I apologize now, and I'll do so at every opportunity to those people I haven't replied to. I will get back to you. I really appreciate everyone who's got in touch.
Mhm.
But no, it's looking pretty back to back between now and the end of my trip.
Mhm.
I know I'm being slow about it, but I will get back to people who've sent me a message, and if anyone else wants to kind of get in touch, then please do. But I apologize in advance if I'm maybe not as quick on replying as I should be.
I've actually got a warning here for you, right? You should be prepared to get a lot of pictures taken. So you're going to be all over social media for the next couple of days and months. Right? So be prepared. Um, uh,
Okay.
Finally, Robin, through this platform of Startup Talks, is there any message that you'd like to give before we say goodbye?
I mean, look, I think first of all, thanks so much for having me on. It's been, I think we've covered some pretty interesting points and ones that, for me as an investor, are pretty important. So
Yeah.
do kind of sort of have a think about it. I'm not saying that what I've said or what I think is right. There are many different approaches to investing. You'll hear different investors say different things, but I think ultimately, for us and what I think is the key to building a sustainable business
Mhm.
is making sure that you are solving a key and kind of fundamental problem for someone.
Mhm.
Because if you're doing that, you're creating a product or a service that should be sticky. It should be kind of sustainable in the long run.
Mhm.
Your end users will want to keep using you, and that ultimately, uh, whether you're going to be $1 billion business or $100 million business,
Mhm.
that's something that investors today want to see and investors down the line want to see.
Mhm.
So really make sure you're solving a problem. Make sure that you're doing so very much in kind of dialogue with your end user and not in a kind of a bubble,
Mhm.
thinking that what you're building is the perfect thing to build, because more often than not it's not. The kind of reality of how people use products is always different. So
Mhm.
make sure you're engaging with your end user, building something that really solves their problems, maybe different to what you thought it was going to be in the beginning, but it almost certainly will be. But really, if you keep doing that, then I think you're giving yourself the best chance of being able to build a kind of long-term sustainable business.
Mhm. That's a great, wonderful message here, Robin. Was wonderful speaking to you. Hopefully, as long as my test come negative, hopefully we'll bump into each other while you're here in Karachi, right? And best of luck with exploring and getting your hands dirty and get lots of those pictures taken, right? We'll see you around on the media for the next couple of days. And if there's my offer still stands, right? If there's any way I can help out and help you connect with people over here, you know where to reach me. Just pop in a message and I'd be happy to do it. Okay.
Thank you so much. I really
No
appreciate it. Thank
problem.
you for
Best
having
of
me on
luck.
here and for taking the time.
Best of luck. Have a wonderful
Brilliant.
time here in
Thank you.
Pakistan. Thank you. Thank you. Bye bye.